Welcome back to the How to Buy a Home video guide. And now we're going to start really digging into what your steps are when you're ready to buy a home. And I'm going to guess that you're most likely in one of two camps. That either you've already started going to open houses, started looking at homes, and someone that you met, a real estate agent, a seller of a home, asked you if you were qualified. And you maybe have been scared to get qualified, or you just don't even know where to go to get qualified. So that's why you have found this video, or you have started talking to our office. Or you're in the other camp, which is you've done some research, you've read that the first step in the process is getting qualified by a loan officer. And so what you then need to be doing, no matter which one you're in, it is a little better at times to get qualified up front. And the reason for that is that there might be something we need to address before you qualify. So you don't want to waste time looking at homes if we need to take 2 weeks, 4 weeks, and you found your perfect home. And if you are here and it's your first step, great. And if it isn't your first step, that's okay too. We work with what we got and we get you qualified. That is the goal of what we do here at Keystone Alliance Mortgage. So getting pre-qualified and the whole mortgage process and buying a home is really confusing. It has become more and more confusing over the years as regulations have been added, and some of them are going to seem really silly and stupid. And the job of the person that you work with is to make it as easy and smooth as possible, or to help you overcome the humps that are holding you back from getting pre-qualified before. So going to a loan officer like myself, or we've got other loan officers on our team, going to a loan officer who's going to guide you through this is the most important first step. And some people do ask to come into the office right here, sit down, and go over getting pre-approved, which is completely okay and normal. And I love when people do that. The one thing to make sure of, though, is I'm going to take you over to my computer, because when you start the pre-approval process, a loan officer can't sit and talk to you about your options until they get some basic information. So let's head over to my computer and check out what information you're going to be submitting when you start getting qualified to buy a home and see how much you qualify for. So for most of you, you most likely are going to start the process online or on the phone. You're going to call a loan officer who's going to help you calculate what you qualify for. So for the most part, I know in our office, there are mobile apps and online applications. And this is where it starts, because a loan officer can't figure out how to help you without some basic information. So I wanted to show you, this is the application that you would get if you were getting pre-approved. And you just say, all right, I'm purchasing. Once you got to this website, I'm purchasing. And I want to purchase a single family home that I'm going to live in as my primary residence, unless you're going to do one of the other two. And my name is Megan, my middle initial, March. Next. What's my email address? And my phone number. Next. What's my address? Renting too long. Erie, PA 16506. And you hit next. And you just follow this along. I've lived here for 2 years and 5 months. And I'm renting. My rent amount is $900. Next. When's my birthday? And you just go through. It's when you know you're old, when this thing scrolls. You have to keep going. That's not my birthday. You put your social in there. And then you're going to put your monthly income. So if I made $60,000 a year, that's $5,000 a month. If I get bonuses, commissions, you'd put it in here. If you have a part-time job, tells us here. Or let's say you receive child support or alimony, so you put that there. Do you have any additional income? Yes, I get child support. It's $300 a month, and you're going to tell it it's child support. And nope, I don't have any other. How am I employed? I'm employed. or if you're self-employed, you'd put that in there. Who do you work for? Keystone Alliance Mortgage. How many years? 5 years. If the months are different. How much is in your bank accounts? So you'll put, okay, I've got 2,000 in checking, 5,000 in savings. My retirement account might have 10,000, or if you don't have any, that's okay too. You just put that in there so that the loan officer knows how to help you. Do you own any other real estate? I'm going to put no for now. I am married. Do I pay child support? No. Or am I a veteran? I'm not, but if you were, you'd want to check yes. No, I don't want to have someone else on here. How'd you hear about us? I would put if it was a realtor, friend, internet, whichever way. So you put the realtor, Bob. You don't have to put their number in. Have you had a bankruptcy? No, no, no. And all of these questions, you hit I agree, you sign it, and you submit it. And that is what will then give the loan officer that you're working with a file that looks like this. And it fills in the information that we need to start figuring out what you qualify for. And let's pretend, so I can show you how this works. Your income would go in there, and then we would pull your credit report, and let's say I'm going to create the debts here. Let's say you have a car loan, and your car loan you owe $15,000, and the monthly payment is $400 for 60 months. And okay, so we'll save and close it, and then let's say you have a credit card. And that credit card has a balance of $4,000. The minimum monthly payment, let's say it's $250, and it is what's called a revolving charge. And then let's say you have a student loan, and your student loan is for $50,000, and it's on income-based repayment, and your payment's $100. And you have, I don't know, 100 months left on it. Okay, so all these things go in here. So it tells us you have $750 in payments. And so I want to show you this because this is how loan officers start figuring out how you could get qualified. So let's say with our example that my income is $5,000 a month, I make $60,000. And so now it's in there. What banks, how they determine how you qualify is right here. So this is the debt to income ratio. It has 29% because that's based on $5,000 a month. And the math of that is it takes, let's say a bank wants to, they don't allow you to go over a 40% debt to income ratio. That means, excuse me, of that 5,000, you can have 2,000 in payments. Okay, so it's important because the more debts you have, the higher this goes, and it adjusts. Because if I start adjusting here, if I start adjusting, let's say you wanted to buy a $200,000 house. See how my debt ratio just went up. And let's say the taxes were 200 in their debt ratio. That's how you can go over it. That's where a brokerage is really helpful because the mortgage rules, the government does not set a minimum credit score, a debt to income ratio, it's the lenders. So you could walk into your bank, you could walk into or call an online lender, and whatever their rule is could be 40% or a credit score of at least 700. And how the score gets picked is you've got 3 scores, it's the middle of the 3 that's used. So in this case, it'd be the 700. And then from there, the loan officer is going to call you, go over questions, and then they're going to present you with options. And I'd highly recommend, if you're not being shown more than one option, that you ask for that. What we're going to do next is we are going to walk through 2 options and 2 more first-time homebuyer type options, an FHA loan and a conventional loan that only requires 3% down. And we're going to do that so that you can kind of see what the most important things are here on this sheet, and so that you can understand how much money you'll need and how much seller's assistance that the seller's assistant that you get when you're qualifying, and if you need to ask for it when you find that house that you want to put an offer in on. So once you go through the process of you're filling everything out, the loan officer will take a day or two to work on your pre-approval, and then you're going to receive a pre-approval letter and some numbers. And so I'm going to show you here what an example pre-approval letter looks like. And every lender, they could look a little bit different. So just keep that in mind. So this is a pre-approval letter that has Keystone. It has if I was the borrower, and it says that we're pleased to notify you that you've been pre-approved for a mortgage based on the information below. The pre-approval will state the type of financing. So this one says FHA and USDA. Here's the max payment with the two programs, and you'll notice it's different because each program has different rules. And then if you can get seller's assistance. And then it says an underwriter's mortgage commitment will be provided after you've disclosed on your mortgage application. So once you found a house is when the underwriter comes in and your official approval that they're committing that money to you. So this is your pre-approval letter. It's really important you stick to the amounts and the payments. As a loan officer, I don't put the amount of the house because every house can be different. You can have 3 houses for $100,000 and they all have different payments because the taxes and insurance are different. So keeping in mind that payment is very important. And then we're now going to go to the numbers. So I had said, I also think it's important for you to at least get 2 options. And what you're going to see here is it's going to show you purchase price of the house, the down payment. So this is an FHA loan, 3.5% down, loan amount, interest rate, 3.6. Housing expense, it's going to have the whole payment, so $1,297. So let's say you're pre-approved for up to $200,000, and you could get a payment of up to $1,297. Now, one of the questions I always ask people is, where do you feel comfortable? If you're renting for $900, do you want a payment that goes as high as $1,300, or do you want to stay around that $900? And if you want to stay around the $900, that's why I'll provide, like, here's your max, and then here's a different price. I also am showing an FHA and a conventional to show different types of loans. And so you have your payment, and then the total cash to close is right here, that $14,636, or on a $100,000 house, $99.94. Now, the other thing I always tell people is do not be freaked out by the total cash to close, because seller's assistance is where your loan officer and your realtor should work together. Do you need seller's assist? And FHA allows for up to 6%. You might not be able to get all of it sometimes, or it may be used for paying your rate down, but the amount here, this can be reduced by everything except the down payment. So that means you could ask the seller for $7,000 and then all you need is $7,600. On a conventional loan, you can't get 6%, you can only get 3%. So you could get $3,000 to bring that down to $69.94. Very helpful though for most home buyers who don't have, all that money. The last thing I wanted to point out here is I'm going to pull up what makes up those numbers that we just subtracted the seller's assist from. So I am going to bring up what's called a fee sheet. And this is probably more typical of what a lender will send. And the fee sheet shows you a couple things. It'll show you the purchase price, same, like this is where the numbers flow from, $14,600, $1,297. But this number is made up of 3 things: the down payment, the prepaids, and the closing costs here. This third one is in the loan amount. But it's worth noting, I think a lot of people get really confused with this. Couple things. Prepaids and closing costs. The lender is not charging you all of these things. The lender is not charging you 75% of these things. The lender is just making sure you have the right information. When I go up here, the closing costs and the prepaids are all listed in here. The only cost that the lender is responsible for charging you is the first line item, the $895. Everything else is other people. And a lot of people will go to a lender and get a fee sheet and then get one from someone else. And a lender could put less taxes, less insurance, less interest. And it's going to be what it's going to be. And our job as lenders are to give you the most accurate information, because the worst thing that can happen is you think you need 7,000 and you go to closing and you get a call and you need 9,000. So for anyone who, if you're getting multiple estimates, keep that in mind. Really, it's what is the lender charging you up here? Because everybody needs an appraisal, and the appraisal is chosen by a system that the government has set up for banks. The credit report fee is usually 30 to 60 bucks, depending on, who they use. This upfront mortgage insurance, which was that same number down there, government loans have a cost that gets rolled into the loan. And then the majority, which is right here, lender's title. These are all what an attorney or title company is going to charge you. So all right here, I'm trying to show this person what a normal title company in Pennsylvania is going to charge them for this price of a home. Then the transfer tax is 1% of the sale price. So I had 100 and a 200,000 in there. So if this is a $200,000 house, that would actually be $2,000. Daily interest, 15 days is right in the middle of the month. That means whatever day of the month you close, you will have as many days that's left of interest. So if you close on the 25th, you only have 5 days of interest. And then hazard, and these are the prepaid. So you're going to need to pay for a whole year of insurance. You pay your insurance up front for a year, and then it goes in the payment until you've collected a year again, then it gets paid, and your taxes. And we do loans in a few different states, so this is different in each state. In Pennsylvania, taxes are paid a majority up front. So you'll see 10 of the 12 months get collected at closing. I just closed a loan in Florida, and it was like 2 or 3 months because taxes are collected at the end. So all these numbers, as you can see, have nothing to do with the lender you're choosing. The lender is going to be responsible for just the underwriting fee, the interest rate, and the program and the mortgage insurance. Last note on that is rate is not everything. If you just rate shop, you will get this wrong. I could show you here 2 different programs. One will have a lower rate but a higher payment. The mortgage insurance on your loan is going to have more of an impact than your interest rate. And so that's why looking at different options is really important. At some point, I'll do another video on that. I mainly wanted you to be able to understand this and understand, okay, I can get seller's assist. It can cover a lot of this. I'm the one picking a lot of this stuff because I'm picking the house, the attorney, the insurance agent. The only thing you don't pick is the state's transfer taxes and the recording fees. So I hope this helped. I hope that you are going and getting ready to get pre-approved to be able to purchase a home. I can't stress to everyone the importance of having someone who's going to walk you through these things, someone who's going to give you options. Once again, I truly believe that a broker, wherever you are, a broker is going to give you more options, and they're not going to be as restricted. It's kind of like if you're sick, you have a cold, or you have bronchitis, you're going to go to your family doctor, right? Just like you go to your bank. If you have to deposit money, get a car loan. But if you had a major issue like my knee's hurting me right now, I'm not going to go to my general family doctor for my knee. I'm going to then go to a specialist. And someone who is a broker, all they're doing are mortgages. They know mortgages inside and out. They have many options. They have many banks. They don't care about the bank as much as they care about you. So go get pre-approved and then get that house found. I'll see you in the next video once you have found your house and are ready to apply for a mortgage. Bye, guys.